Hi everyone, you're all very welcome to our weekly market roundup here at the Alpha Capital Group. So of course this week, obviously very tumultuous week, back and forth. We've seen upside volatility, we've seen downside volatility, and we've actually seen some fairly significant volatility into this week's weekly close this week. Broadly speaking, obviously, given the backdrop of earnings, we talked about it yesterday, the Google earnings, the Microsoft earnings from Tuesday, the Meta earnings from Wednesday, the Amazon earnings from yesterday, and of course, the broader volatility, the intraday data, the intraday events, volatility is obviously going to set to continue next week into a new month as we approach the beginning of May. And of course, next Wednesday, we have the next FOMC meeting, of which will be crucial for the broader markets. And of course, that will give us a little bit more insight as to where major personnel or the key kind of leaders of central banks actually see market dynamics in the back of the data over the last month or so as well. So Wednesday, we obviously have the Fed meeting, which is going to be very interesting indeed. Now, this week, just quickly rounding up the data this week, as I said, we went through the earnings reports for Microsoft and Google yesterday, and of course, factoring in that volatility as well is very prevalent and very important, obviously, given the volatility this week. Since then, we've obviously had yesterday, we've had fairly inconsistent, shall we say, GDP data. When we look at broader gross domestic product, broader growth, it is actually reduced from where it was both end of 22 and beginning of 2023 in Q1, where it's falling from 2.6% to 1.1%. So that's obviously a fairly noticeable reduction in growth in output from a broader economic perspective in all assets of that regard. I suppose more broadly today, we've had very mixed data in Europe. So we've seen, again, up and down volatility in the likes of the European indices, FTSE, Dax, Euro Stoxx, for example. So, of course, today, obviously, we'd initially sold off in the FTSE into month end, which generally happens with pension fund redemptions. But since about 12 o'clock, 1 o'clock, we've actually seen a fairly significant recovery in some of those assets. And we're seeing that risk rally continue into the weekend, where we'll talk about it now in a second. US assets, European assets have all moved higher despite some of this waning data as well. So that's why it's important that the data isn't always going to be the way you expect in broader dynamics, because of course, looking at German data, for example, German growth, core PCE today being higher, that would have been in theory been a fairly negative annotation for the markets, and we should have been seeing fairly clear selling, but we haven't. So that's why the markets, the movements from news, the movements from data doesn't always move the way you expect it to move, and that's why it's important to be aware of that as well. Now, I suppose looking ahead to kind of this week's weekly close, we have seen very clear chop and volatility in the dollar. Now, I suppose the big talking point this week was how would the dollar react around these kind of monthly lows from April at around this 101 level. Of course, this week on Tuesday and Wednesday, we found that bottom around 101.25, and since then we've been zigzag back and forth between kind of 101 and this kind of 102 level from where we were trading last week. So if you were to look at last week, we were very tight in this highlighted region of consolidation. But overall, this week, we're actually doing moderately well from where we were on obviously last Friday, and obviously where we opened up on Sunday. And you can actually see broadly where the cursor is there. We're only narrowly down in the dollar. Given the upside, given the downside volatility, it's probably going to close the week pretty much flat on the DXY. So that's why it's important to look at the bigger picture. If you're short-term trading, that's also cool as well. But making sure there's clarity in terms of what you're doing, the execution, and being able to identify these things as well is also important. Now, again, when you look at kind of intraday volatility throughout the end of the week, as I said, very wicky back and forth moves. So we kind of had that midweek reversal Wednesday to Thursday. In the indices, we found a bit of a bottom. Indices have rallied yesterday initially. It's continued that rally into obviously the weekly close. We're seeing that spike even in the dollar on the other side. So normally speaking, again, Friday volatility can sometimes be a bit of an enigma. Or a bit of an unknown, because of course, if you're seeing stronger indices, we really should have been seeing that continued weaker dollar. Now, although we've seen weaker dollar today, it hasn't been kind of an overwhelming follow through in terms of the volatility. So if you're looking at Euro USD, you're looking at dollar USD or GBP USD, you're looking at dollar yen USDJPY, you're kind of seeing that visually as well in the background. So of course, Euro USD, from where we've been pretty much holding above this kind of 109.50 level. That's been very prominent this week. And we've also been holding the highs here at 110.75. So broader trend, you would have seen kind of clear continuous order flow to the upside. Trend would have been very, very clear, very, very pronounced. But this week, obviously, price action's just been gaining or yearning back and forth between this area of liquidity, which was identified as Monday and Tuesday's lows, and obviously this breach of highs, which was formed Wednesday, where the markets has actually come back lower again. So we've been very much trading between these kind of short-term price action levels, which is also quite important. So if you're trading lower time frames, it's important to be able to identify these kind of prominent areas of supply and demand, because more rationally, that's kind of where you're probably going to see some sort of market reaction in the background beyond that. And of course, we've seen it very, very clearly this week in Euro USD. GBP USD has been a little bit more different because, of course, the pound has been really outperforming this week. So if you look at any of the GBP pairs across the board, right, pound yen, pound Aussie, euro pound is seeing a little bit of a decline, pound CAD, pound Kiwi. Pound has been very, very strong this week. And of course, that's been noted in the GBP USD pair, particularly because, of course, this is where we were trading last week. We broke structure short term. We talked about it initially on yesterday's call, came back into this value area, into this short term range. And really, from where we were kind of Wednesday and Thursday, we've just rallied through that weekly high, short term weekly highs here at 125, and has actually created new highs in this broader trend. So if you're looking at cable really since the back end of March, we've just been gradually kind of chugging our way higher. It looked like we were getting a period of consolidation, and actually today the markets has broken out to the upside. So again, buyers are still in control, at least in the short term, and at least into this weekly close. Now, really, realistically, after we've created new highs here, and structurally here again, I wouldn't be really surprised if we saw price action return back into this value range. If you're looking at it from a 1 hour range, you'll even see it here as well. 1 hour range, very aggressive breakout. It does look like cable's probably going to come back somewhere into this 124.80, 125. And that's kind of what I'd be looking at near term, given that we've created new highs, given that the trend is obviously very much ticking up to the upside. Moving across the dollar yen has been very, very tricky as well, because of course, from an order flow perspective, we talked about it, that kind of clear correction. So bullish trend coming back into this level, hasn't quite met liquidity area, hasn't quite got the discount zone, but there was a 618 retrace, or very, very close to a 618 retrace. So if you go from swing low to swing high, you can see it there. Very, very clear reaction off the 618, and price actions very aggressively broken up. This counter trend sell-off that we've seen has been very much mitigated, has been very much cleaned out, where we've got that buy side continuation, bullish imbalance, creating new highs in the region, and we are now working ourselves again back up into this 136 level. And this is, of course, where we had that sell-off, peak highs at the early part of March in dollar yen, where we had that very clear descension through March into that end of March bottom on dollar yen, which has signaled this recovery back up. So again, broadly, market dynamics, what goes up must come down eventually, and we're seeing that very, very clearly there in the price action as well, where we've created a new set of highs. Price action starting to get a little bit wicky up here in this area, 136, 136.50. So you'd probably expect to see potential profit taking from those who've got in on the buying opportunity today. You're probably going to see potential profit taking opportunities up here. All right. So moving across then to indices very, very quickly before we finish. So obviously this week, really all eyes was going to be on these monthly lows. We talked about it yesterday. These monthly lows were kind of holding up really from the beginning of April. We did temporarily break. So this is again showing the volatility. So we had kind of that consolidation. We had a little bit of a rally off of the numbers Tuesday evening, Microsoft and Amazon. We had a little bit of a rally last night from the meta numbers, Wednesday night from the meta numbers. But as you look at price action Thursday, we saw a very significant rally Thursday across the board. S&P, Nasdaq, Dow Jones, very, very clear rally. And we've fully kind of mitigated back into this previous range where we were trading all through the last kind of 2 weeks, with the exception of this week. So the 2 weeks prior, we were kind of moving laterally between this kind of 41.20, 41.80 range. 2 very, very bullish days sees price action return back into those highs and aggressively moving higher off of those monthly lows, which was temporarily broken on Wednesday, as we can see. So really that kind of sets the tone. I suppose now it just really depends on how does the price action close into this week, right? So we've got a couple of hours left to the close. We are seeing S&Ps trade pretty much at month highs. We are also seeing February S&P trade nearly at year highs as well. So where we are at the start of the year, the S&P is nearly trading at yearly highs as well. So it'll be interesting to see, is there a continuation in buy side momentum, a sentiment from market participators, be it institutions, obviously market makers or retail traders. So it'll obviously be important to keep an eye on that next week. Similarly with the Nasdaq, we've had very clear consolidation through the month of April. We had that very, very clear buying opportunity yesterday. Small follow through today, but we are now sitting at month highs up here around 13,150, 13,200. And of course, if you go out to the daily, we are also sitting at yearly highs on the Nasdaq as well. So higher time frame indices are still trying to chug higher again from those recoveries. From a monthly perspective into month end today, we're also seeing indices do moderately as well. Now, considering that, as I said, we do have FOMC on Wednesday, indices are actually holding up very, very well. So if we were to make, let's say, new highs into this weekly close, it would be interesting to see if there's any sort of retracements, any sort of pullbacks Monday, Tuesday into FOMC, given the buying sentiment that has actually really been kind of taken out from this 12.8 level, 12.850 up to 13,200, which again shows a nice little 2-3% rise in indices over the last couple of trading days or so. Lastly, in the US, obviously the Dow Jones as well is trading again at obviously monthly highs again from where we were last week. 34,000 is in range at this moment in time, and that's effectively where we're trading at. Now, unlike the other two, Dow Jones is somewhere off where we are kind of with yearly highs. So yearly highs is around about 34,300, 34,400. But we are seeing it about kind of 1% off highs. So naturally enough, S&P is at yearly highs, Nasdaq is at yearly highs, Dow Jones is a little bit of a laggard. So it's just about being aware of that one as well. So, but at this moment in time, a very clear V-shaped recovery over the last couple of days in particular, right? Monday, Tuesday, Wednesday, a little bit of a lull to start the week, and obviously that V-shaped reversal, very, very clear buying Thursday, and obviously today with that follow through as well. So it just shows that indices at the minute, despite some of those data points, despite obviously Fed next week, should I say, is still holding on relatively well. Now, of course, last but not least, just European indices. So today we obviously had FTSE selling off this morning into month end. I suspect there's probably a bit of redemptions on the pension funds, but as I said, beyond 4:30, in particular, really kind of 12, 1 o'clock, if you're going to go earlier in the day, we've started to see that market kind of move slightly higher, really from 12, 1 o'clock, really into kind of where we are now underneath this 7,900 level again. Now, when you're looking at it broadly, we had consolidation over the last number of weeks, similar to some of those other assets, like for the S&P, for example. Price action is making its way back up into the 78.80, 79.20 level. And I did mention it yesterday in passing. This was an area that I was going to be looking at to see, could the price action get back up? It's now heading in that direction. So it really just depends next week. Is there any sort of structural clarity being obtained by a clear market reaction from this region? I think that's really, really important as well. DAX to finish, DAX and Euro Stoxx to finish. DAX, as we know, it has been very choppy, very range bound for the last week's 4-hour structure has been very much range bound. 15,750 with wicks into 15,700 is obviously the bottoms. 15,900 was tops. And as you can see on the 4-hour structure, on the 1-hour structure, 1-hour structure did get a short-term break of structure back up. 4-hour structure has held lows and has broken to highs. So it does show that even European indices today, DAX is holding up relatively well, is trying to push higher as we look at another strong weekly close by the DAX. And we've talked about in previous videos over the last couple of months, the outperformance in European assets since the beginning of the year. Lastly, but not least, then is Euro Stoxx. And again, Euro Stoxx, very, very clear selling. Initially, this morning, there was a very clear sell-off with obviously the FTSE and some of those other moves in Europe this morning. But all of a sudden, we found that bottom. We have come back up, and where we sold off from, let's say 6, 7 o'clock this morning, around that 43.50, 43.60 level, the Euro Stoxx has returned very, very cleanly back up into this range. So really where we start, where we ended the week, where we started from, Euro Stoxx is a little bit down on the week. If you look at where it was last Friday, we are probably about 1% down, right? So Euro Stoxx about 1% down on the week. But again, today has shown a very, very significant recovery from where it was or where it sold off from 8 o'clock this morning. So very, very useful weekly roundup. I think it's really all eyes is going to be on how markets close for the week. Obviously, having structure, having clarity is really, really important. I'm just kind of gauging for what's going to be hopefully a fairly volatile. We want volatility. We like a little bit of we like a little bit of volatility in the markets, obviously, because it gets the blood going and gets markets moving, because you don't like to see too much of a flat consolidated market. So next week is obviously going to be important in the phase of Fed meetings. So that's pretty much it for this week, folks. Again, as always, please feel free to check us out in our Discord community. We're constantly doing different competitions and giveaways. Our new trading competition will begin for our members on Monday as well. So please do feel free to sign up through our dashboard on that as well. All right. Have a great weekend, everyone. Enjoy the bank holidays, and we'll see you all next week.